The money sitting in your bank account right now is quietly dying, and the system you trust is the one holding the weapon. Every hour you spend trading your energy for paper currency, the invisible clock ticks, eroding the value of what you earned yesterday. You were taught that saving was a virtue, that leaving your wealth in a vault was the path to security, but nobody warned you that the vault has a massive silent leak. While you sleep, the purchasing power of your hard-earned labor is systematically transferred away from you, leaving you with the exact same numbers on a screen, but a fraction of the actual freedom those numbers used to buy. It is a slow, agonizing bleed that most people only notice when it is already too late, when the price of a simple life has drifted completely out of reach. If you look closely at the architecture of the modern economy, you begin to see that the rules were never designed to reward the passive observer. When the floodgates of global currency creation open, billions of new dollars pour into the ecosystem, diluting the value of every single bill tucked away in a wallet or a traditional savings account. It functions exactly like pouring water into a rich, complex soup. At first, the change is barely noticeable, but as the volume increases, the substance disappears until you are left with nothing but a tasteless, empty liquid. The structural shift that happens during these cycles does not destroy wealth, it merely redistributes it. It flows away from those who trade time for cash and directly into the hands of those who understand how to capture the shifting tides of asset values. The tragedy is that the average person reacts to this pressure by doing exactly what will harm them the most. They tighten their grip on their cash. They cut back on the small joys of life, and they try to shrink their way to financial safety. But you cannot shrink your way to true sovereignty in an environment designed to expand indefinitely. Budgeting has its place for maintaining order, but skipping a morning coffee or canceling a minor subscription will never fix a fundamental structural leak in the global currency system. The wealthy do not survive these economic shifts by playing defense or by hiding in fear. They recognize that a changing landscape is the ultimate catalyst for wealth acceleration if you know where to position your sails. To truly break free from this cycle, you must first transform the way you view currency itself. Cash is not wealth. It is merely a temporary medium of exchange, a transient vehicle meant to move you from one productive asset to another. Holding onto it for too long is like holding a block of ice on a warm summer day, watching it slowly melt through your fingers while convinced you still own the solid mass. The moment you shift your perspective from accumulation to allocation, the entire financial game changes shape. You stop looking for ways to store paper, and you begin looking for ways to acquire structures, systems, and assets that naturally expand in value as the surrounding currency devalues. Think about a quiet evening where you sit down to look at your future, feeling that deep, underlying anxiety that things are becoming harder to sustain despite your best efforts. That friction you feel is real, and it is not a personal failure. It is the friction of swimming against a massive macroeconomic current. But once you realize the direction the river is flowing, you can stop fighting the water and start using its momentum to propel you forward. The path to empowerment begins with clarity, recognizing that the current system rewards ownership and punishes pure preservation. By stepping out of the role of a saver and stepping into the role of a strategic allocator, you take the weapon that was meant to deplete you and you transform it into the very tool that builds your long-term independence. This transformation requires a profound shift in mindset, moving away from the comfort of perceived safety and toward the reality of calculated growth. It requires you to look past the daily noise of financial headlines and focus on the deep, underlying mechanisms of value creation. When you begin to see the world through this lens, you realize that every period of monetary expansion is an invitation to rebuild your foundation. It is an opportunity to acquire pieces of the world that cannot be printed out of thin air, structures that possess inherent utility and value that time cannot erode. This is the moment where you decide whether to remain a casualty of the changing economic tides or to become the architect of your own resilience, steering your life toward a future defined by abundance rather than scarcity. As we walk this path together, consider taking a moment to connect with this message if it speaks to the deeper truth you have been sensing in your own life. Subscribe to these insights. Share them with someone who is tired of running on the financial treadmill, or leave a thought below about the exact moment you realize the old rules of money no longer apply to the world we live in today. When you observe the actions of the most resilient financial minds, you notice they share a common understanding of debt that completely contradicts traditional advice. To the untrained eye, all debt is a dangerous trap, a burden that chains a person to their past mistakes. But in an environment where currency is losing its value year after year, fixed-rate debt becomes a powerful mechanism for wealth generation. If the value of a dollar today is significantly higher than the value of that same dollar a decade from now, borrowing money today to purchase a highly productive asset means you are paying back the lender with future currency that is vastly diluted. The asset grows in value along with the changing tide of the economy, while the real weight of the liability shrinks in slow motion. This is exactly why the largest organizations and the most sophisticated individuals in the world actively seek out borrowing opportunities even when they are sitting on billions in liquid reserves. They understand that using their own capital to fund operations or acquisitions is often an inefficient use of resources when they can secure low-interest loans instead. By investing their cash into high-yield environments or core business growth while leveraging cheap, fixed debt, they create a spread that constantly feeds their expansion. They are essentially shorting the currency, betting that the money they owe will become easier to acquire and less valuable over time, while the physical and digital infrastructure they buy remains fundamentally indispensable. To apply this principle in your own life, you must learn to distinguish between debt that drains your life force and debt that builds your freedom. Borrowing money to acquire depreciating consumer goods or to fund a lifestyle you have not yet earned is a sure path to financial captivity. But utilizing structured, responsible leverage to acquire assets that produce consistent cash flow or hold intrinsic long-term value changes the entire equation. It allows you to control a much larger share of the productive economy than your current liquid savings would allow, ensuring that as the broader monetary base expands, your net worth expands along with it, driven by the very leverage that others view with fear. This approach demands a high level of discipline and a deep understanding of risk management, because leverage can cut both ways if miscalculated. The goal is never to overextend or to gamble on speculative movements, but to find stable, cash-producing structures where the income generated safely covers the cost of the debt, while leaving a healthy margin for growth. When you master this balance, you stop viewing liabilities as a weight around your neck and begin seeing them as a strategic lever. You align your personal finances with the exact same mechanisms that global institutions use to protect their wealth, ensuring that the changing economic landscape works for you rather than against you. Every step forward on this journey reinforces the reality that financial mastery is less about working harder and more about understanding the hidden rules of the game. It is about recognizing the difference between what appears safe and what is actually secure over a multi-decade horizon. As you begin to implement these shifts, you will find that the anxiety of rising costs gives way to a sense of quiet confidence, knowing that you have positioned your resources in alignment with the true forces of economic expansion. The realization that the monetary system is designed to favor assets over cash brings us directly to the concept of tangible protection. For centuries, when trust in paper currency faltered, or when governments printed money to navigate deep crises, human beings instinctively turned to the Earth's oldest monetary anchor. Gold has historically served as a preservation mechanism, because it cannot be created out of thin air by a decree or a printing press. Its scarcity is defined by geology, not political convenience. When the modern economy faces unprecedented uncertainty and supply chains fracture under the weight of geopolitical friction, the collective psychological instinct of global investors shifts from speculative growth to ultimate survival. This behavior pattern repeats itself across history like clockwork. During major economic disruptions, such as the financial crisis of 2008 or the sudden arrival of a global pandemic, the rapid influx of liquidity into the market causes investors to panic about the future purchasing power of their currency. They flock to precious metals, driving prices to historic highs because they seek a sanctuary where their wealth can sit undisturbed by the volatility of the printing press. While a fiat currency can lose a massive portion of its purchasing power over a century, a physical weight of gold retains its core purchasing power relative to real-world goods, serving as a permanent witness to the steady devaluation of paper money. However, relying solely on passive commodities exposes a critical limitation in a builder's strategy. A bar of metal sitting in a vault does not innovate. It does not employ people. It does not produce a yield, and it does not pay you rent. It simply shines. It is a reactive shield against disaster rather than an active engine of prosperity. The true masters of wealth do not merely want to preserve what they have. They want their capital to actively participate in human ingenuity. They recognize that while gold can protect you from falling backward, active assets, like well-run businesses and strategic real estate, are what allow you to leap forward. This brings us to the profound realization that the ultimate weapon against currency devaluation is ownership in the productive capacity of humanity itself. When you own a share in an exceptional business, you own a piece of a living organism that adapts to changing economic realities in real time. If the cost of raw materials, labor, or transportation increases across the economy, a business with strong pricing power simply adjusts the price of its products or services to maintain its profit margins. The consumer pays more, the revenue of the company expands, and as a part owner, your equity grows along with the rising tide of inflation. You are no longer the victim paying the higher price at the grocery store. You are the investor, capturing the cash flow generated by that very transaction. Think of a moment in your own journey when you looked at the rising costs around you and felt a sense of powerlessness, wondering how long you could keep pace with an ever-shifting baseline. That vulnerability disappears the moment you transition from being purely a consumer to being an owner. If this perspective shift is opening your eyes to the true mechanics of financial resilience, take a brief moment to engage with this journey. Subscribe to this audiobook series, share this chapter with a friend who is trying to survive on savings alone, or drop a comment reflecting on how you plan to shift your focus from passive protection to active ownership. By anchoring your capital in businesses that provide essential goods and services, you align your future with the unstoppable drive of human progress. Great companies do not sit still. They optimize their operations, invest in new technologies, and capture market share even during turbulent economic cycles. When the monetary base expands, it inevitably flows through the hands of everyday people and directly into the registers of the corporations that provide their daily needs and desires. The stimulus checks and wage increases that flow into the economy ultimately collect in the balance sheets of dominant enterprises. This dynamic is precisely why equity markets have historically outpaced inflation over the long term, acting as a natural compounding machine for those who possess the patience to stay invested. When you buy a broad basket of high-quality businesses, you are effectively betting on the collective survival and growth of the entire economic engine. You bypass the risk of trying to pick a single winning stock or timing the market perfectly, choosing instead to let the compounding nature of corporate earnings do the heavy lifting for you. Your wealth becomes tied to real-world utility, making it immune to the mathematical erosion that destroys pure cash savings. As you develop this owner's mindset, the entire structure of the daily economy begins to look entirely different to you. You no longer see just products on a shelf or bills to be paid. You see cash flow cycles, asset classes, and strategic opportunities to position your capital for maximum resilience. The anxiety of the unknown transforms into a quiet, calculated focus on accumulation and long-term positioning. You realize that the greatest asset you can ever manage is your own choice to move away from the sidelines and step firmly into the arena of ownership, ensuring that every macroeconomic shift becomes a wind that pushes your sails forward rather than a storm that tears them down. The evolution of ownership naturally expands into the digital realm, bringing us to a frontier that has completely redefined how a new generation views scarcity. In a world where central banking systems can expand the monetary base by trillions of dollars at the stroke of a keyboard, the concept of absolute digital mathematics emerged as a direct counter-response. For the first time in human history, code created an asset class with an absolute supply cap, ensuring that no matter how much demand increases, the protocol cannot be altered to print more units. When the traditional economic system injected an unprecedented volume of capital into the market, a massive wave of liquidity flowed directly into this digital landscape. Investors began to view these decentralized protocols not merely as speculative vehicles, but as digital gold, a modern sanctuary designed to withstand the rapid expansion of paper currency. However, entering this space requires an absolute rejection of blind enthusiasm. Because this digital ecosystem is still in its formative eras, it remains highly volatile. unpredictable, and prone to extreme short-term fluctuations. The sharp price movements can easily crush those who act out of greed or a fear of missing out, especially when the asset dominates mainstream news cycles. The true strategic minds do not chase the peak of a public frenzy. They study the underlying architecture long before the crowd arrives. They recognize that while the technological foundation possesses immense transformative potential, using it as an effective hedge against inflation requires a long-term horizon, an iron discipline, and an unwavering refusal to invest capital that they cannot afford to lose. This brings us back to the foundational bedrock of all wealth acceleration, the traditional equity markets, which offer an unmatched balance of stability, transparency, and structural growth. When you allocate your capital into a broad market index like the S&P 500, you are not gambling on a single trend. You are taking a direct ownership stake in the entire productive output of the economic engine. During periods of intense currency creation, the nominal value of these corporations naturally scales upward because the underlying assets, infrastructure, and inventory become more expensive to reproduce. On top of that, the newly printed money circulating through the economy is immediately spent by consumers on basic needs and everyday desires, directly swelling the revenue streams and cash reserves of the world's most dominant enterprises. Consider a quiet moment of reflection, looking at the contrast between those who watch their cash slowly dissolve and those who participate in the compound growth of global industry. If this systemic breakdown is giving you the clarity needed to reshape your financial trajectory, take a brief moment to anchor this realization. Subscribe to this audiobook. Share this insight with someone currently trapped in the cycle of active labor without asset ownership, or leave a comment detailing how you plan to transition your capital from vulnerable cash into resilient, wealth-producing equities. By embedding yourself into the ownership of these corporate giants, you effectively align your net worth with their survival mechanisms. These companies possess the unique capacity to navigate turbulent times by optimizing supply chains, expanding into new global markets, and leveraging their scale to secure favorable conditions. They are the ultimate collectors of the world's floating capital. While the purchasing power of a single unit of currency continuously trends toward zero over time, the value of a diversified corporate portfolio historically compounds upward, ensuring that your wealth does not merely survive the changing macroeconomic landscape, but aggressively capitalizes on it. You cease to be a bystander watching the cost of living climb. You become an active participant whose foundation expands in direct proportion to the economy itself. When you look at the architecture of the truly wealthy, you discover that they rarely hold large sums of cash. Instead, they maintain only a tiny percentage of their net worth in liquid form for immediate emergencies, anchoring the rest of their fortune firmly inside the businesses they have built or acquired. As these enterprises expand, their personal wealth scales in direct proportion, completely insulated from the eroding effects of a decaying currency. Even if you are starting with a modest amount of capital, the very same blueprint applies. By redirecting your surplus away from the traditional savings trap and into inflation-hedged assets, you fundamentally rewrite your relationship with the financial system. This realization marks the point where your relationship with labor undergoes a permanent structural shift. When you rely solely on a standard salary, you are trapped in a linear equation. Your income is capped by the number of hours you can physically work in a day. But when you redirect your surplus into cash-flowing assets, you break that linear constraint and step into a compounding reality. The goal is to build an independent financial ecosystem where your assets generate enough baseline income to cover your modern lifestyle, rendering the day-to-day fluctuations of the job market irrelevant. The path to this level of sovereignty requires you to look past the surface noise of the economy and focus entirely on the velocity of your money. Cash that sits idle is capital that is actively retreating. Wealthy individuals treat currency like a hot potato. They want to pass it off as quickly as possible in exchange for something real, something tangible, or something that produces a yield. Whether it is acquiring a stake in a private enterprise, purchasing a piece of commercial real estate, or expanding a portfolio of globally diversified equities, the core objective remains completely identical. You are turning the transient paper of today into the permanent freedom of tomorrow. When you adopt this philosophy, the psychological weight of rising consumer prices completely lifts from your shoulders. You no longer view the changing world with a sense of dread or resentment, because you have structurally aligned your personal balance sheet with the forces of expansion. When gas, groceries, and housing become more expensive, you recognize that the businesses and assets you own are the very entities collecting those higher payments. You have successfully crossed the chasm from the vulnerable, consuming class to the resilient owning class. Consider taking a moment to sit with this profound realization and acknowledge the mental shift that is taking place within you. If this structural breakdown is helping you map out a clear path to true financial independence, take a brief moment to engage with this masterclass. Subscribe to the audiobook. Share this strategic chapter with someone who is still trying to save their way to safety, or drop a comment below sharing the exact asset class you are prioritizing to secure your future. Ultimately, outrunning the systemic erosion of currency is not about luck, nor is it about discovering a complex financial secret. It is about having the discipline to execute a proven blueprint day after day, year after year. It is about choosing to invest in your own education, scaling your unique earning potential, and aggressively converting your liquid fiat currency into productive real-world assets. The economic landscape will continue to shift, and the purchasing power of paper money will continue its predictable downward trajectory. But by stepping firmly into the role of a strategic owner, you ensure that your foundation remains absolutely unbreakable. The great illusion of modern society is that safety can be found by standing still. Millions of individuals fall behind in this economic race because they succumb to the instinct of doing nothing, accepting rising costs as an uncontrollable act of nature. When they do attempt to protect themselves, they often default to low-interest savings accounts that yield less than a single percent, essentially pouring their vital energy into a leaky bucket that slowly drains their purchasing power in slow motion. Others turn to extreme budgeting, aggressively trimming their lifestyles while ignoring the larger macro picture. They spend hours micromanaging minor expenses, yet never dedicate 10 minutes to figuring out how to scale their underlying income. You cannot shrink your way to absolute financial freedom. You must grow your way there. To break this cycle entirely, the first and most vital step is to invest directly in yourself and your capacity to produce value. While traditional assets like stocks can experience wild short-term market fluctuations that remain entirely outside your control, developing high-value, high-leverage skills transforms you into the ultimate inflation-proof asset. No economic downturn, central bank policy, or market correction can strip away your knowledge or your capacity to earn on demand. When you learn a skill that drastically expands your earning power, you unlock an exponential return that rapidly outpaces the modest, single-digit gains of passive investing. Education is the most powerful hedge available because when the baseline cost of the world rises, your specialized knowledge allows you to rise even faster. Take a moment to step back and reflect on your current trajectory, acknowledging the profound difference between merely trying to survive the economic currents and actively mastering them. If this blueprint for resilience is providing the structure you need to redefine your financial destiny, take a brief moment to solidify your commitment. Subscribe to this audiobook. Share this powerful perspective with someone who needs to hear it, or leave a message below outlining the high-value skill you are committed to mastering this year. Once you have elevated your skills and established a robust, dynamic cash flow, you gain the financial leverage required to consistently acquire assets that naturally appreciate alongside the broader economy. This is the exact strategy that allows the global elite to expand their fortunes exponentially during times of crisis. Because they own properties, equities, and private enterprises, any upward pressure on consumer prices inevitably forces the nominal valuation of their entire portfolio to climb. By shifting your focus from accumulation to active asset allocation, you stop fleeing from the specter of inflation and begin welcoming its momentum, knowing that every tick upward in the cost of the world is a direct tailwind for the wealth you are building. This realization marks the point where your relationship with labor undergoes a permanent structural shift. When you rely solely on a standard salary, you are trapped in a linear equation. Your income is capped by the number of hours you can physically work in a day. But when you redirect your surplus into cash-flowing assets, you break that linear constraint and step into a compounding reality. The goal is to build an independent financial ecosystem where your assets generate enough baseline income to cover your modern lifestyle, rendering the day-to-day fluctuations of the job market irrelevant. The path to this level of sovereignty requires you to look past the surface noise of the economy and focus entirely on the velocity of your money. Cash that sits idle is capital that is actively retreating. Wealthy individuals treat currency like a hot potato. They want to pass it off as quickly as possible in exchange for something real, something tangible, or something that produces a yield. Whether it is acquiring a stake in a private enterprise, purchasing a piece of commercial real estate, or expanding a portfolio of globally diversified equities, the core objective remains completely identical. You are turning the transient paper of today into the permanent freedom of tomorrow. When you adopt this philosophy, the psychological weight of rising consumer prices completely lifts from your shoulders. You no longer view the changing world with a sense of dread or resentment because you have structurally aligned your personal balance sheet with the forces of expansion. When gas, groceries, and housing become more expensive, you recognize that the businesses and assets you own are the very entities collecting those higher payments. You have successfully crossed the chasm from the vulnerable consuming class to the resilient, owning class. Consider taking a moment to sit with this profound realization and acknowledge the mental shift that is taking place within you. If this structural breakdown is helping you map out a clear path to true financial independence, take a brief moment to engage with this masterclass. Subscribe to the audiobook. Share this strategic chapter with someone who is still trying to save their way to safety, or drop a comment below sharing the exact asset class you are prioritizing to secure your future. Ultimately, outrunning the systemic erosion of currency is not about luck, nor is it about discovering a complex financial secret. It is about having the discipline to execute a proven blueprint day after day, year after year. It is about choosing to invest in your own education, scaling your unique earning potential, and aggressively converting your liquid fiat currency into productive, real-world assets. The economic landscape will continue to shift, and the purchasing power of paper money will continue its predictable downward trajectory. But by stepping firmly into the role of a strategic owner, you ensure that your foundation remains absolutely unbreakable. The shift from linear labor to compounding asset growth marks the true beginning of economic sovereignty. When your primary focus is trading hours for cash, you are forever operating within a zero-sum equation constrained by the physical limits of a 24-hour day. But the moment you redirect your financial surplus into income-producing infrastructure, you step firmly into a non-linear reality where money works independently of your physical presence. The ultimate goal of this journey is to establish a self-sustaining financial ecosystem where your asset base consistently covers your modern lifestyle costs, effectively rendering the unpredictable cycles of the job market entirely irrelevant to your peace of mind. To maintain this trajectory over a multi-decade horizon, a strategic mind must look past the daily volatility of the financial press and focus entirely on the velocity of capital. Cash that sits idle in a traditional account is capital that is actively retreating, losing its silent war against systemic currency expansion. Those who build lasting generational wealth treat excess paper currency like a temporary holding mechanism, a tool to be transferred as quickly as possible into something tangible, something structurally scarce, or something that yields a consistent return. Whether it means acquiring equity in an expanding private enterprise, purchasing commercial real estate with long-term leases, or scaling a portfolio of globally diversified equities, the core objective remains entirely identical across every generation. You are systematically converting the fleeting paper of today into the permanent, absolute freedom of tomorrow. When you fully adopt this wealth-building philosophy, the psychological anxiety of rising consumer costs completely evaporates from your life. You no longer look at the evolving global economy with a sense of dread, anger, or systemic resentment, because you have structurally aligned your personal balance sheet with the very forces causing the expansion. When the baseline costs of energy, housing, and daily life scale upward, you recognize with absolute clarity that the businesses, real estate, and assets you own are the exact mechanisms capturing those higher payments. You have successfully crossed the massive chasm that separates the vulnerable consuming class from the resilient owning class. Consider taking a quiet moment right now to sit with this realization and acknowledge the deep mental shift that is taking place within your worldview. If this comprehensive breakdown is helping you map out a clear, actionable path to true independence, take a brief moment to anchor yourself in this community. Subscribe to this audiobook series. Share this pivotal chapter with someone who is still desperately trying to save their way to safety, or leave a brief comment below sharing the exact asset class you are prioritizing to secure your future. Ultimately, outrunning the systemic erosion of paper currency is not a matter of luck, nor is it about discovering a highly guarded financial secret. It is entirely about having the internal discipline to execute a proven blueprint day after day, year after year, without letting emotional market noise derail your focus. It is about choosing to invest heavily in your own specialized education, continuously scaling your unique earning potential, and aggressively converting your liquid fiat currency into productive, real-world assets. The broader economic landscape will always continue to shift, and the purchasing power of unbacked paper money will continue its predictable downward trajectory. But by stepping firmly into the role of a strategic owner, you ensure that your financial foundation remains absolutely unbreakable. The recognition that paper currency is structurally designed to expand indefinitely forces a complete reassessment of how a person views the concept of long-term real estate. In the traditional economic playbook, owning land or residential property is often framed as a marker of personal pride or a simple milestone of adulthood. However, when viewed through the lens of macroeconomic resilience, physical real estate transforms into one of the most powerful, multi-layered defensive shields ever conceived by the human mind. A property is not merely a collection of wood, concrete, and steel. It is a physical patch of scarcity, anchored in a world where the monetary base can be multiplied infinitely at the command of central authorities. The inner mechanics of real estate during a prolonged inflationary cycle operate with a beautiful, natural symmetry. As the volume of currency in circulation swells, the nominal cost of every raw material required to construct a new building, from lumber and copper piping to concrete and specialized labor, scales upward in direct proportion, because it becomes dramatically more expensive to build a new structure from scratch. The replacement value of existing well-positioned properties naturally climbs higher. The physical land beneath the foundation, being completely finite and impossible to replicate, absorbs this monetary energy like a sponge, causing the underlying asset value to steadily trend upward while the purchasing power of the surrounding currency deteriorates. Simultaneously, real estate provides a dynamic operational advantage that completely outclasses passive forms of wealth storage. When you own a productive piece of property, you possess the structural right to collect monthly lease payments from tenants who rely on that space for their shelter or business operations. In a high inflation environment, wages across the economy eventually face upward pressure to match the rising cost of living, which in turn allows landlords to systematically adjust rental rates upward at the renewal of each lease cycle. This means your baseline income stream is not fixed or frozen in time. It possesses an organic escalator that matches or exceeds the real-world erosion of the dollar, keeping your monthly purchasing power completely intact. Think about a cold, analytical look at your future security, realizing that relying purely on fixed income streams or fixed pensions is a slow formula for quiet desperation. If this structural realization about the power of tangible property is opening up a new horizon for your wealth architecture. Take a very brief moment to anchor this momentum. Subscribe to this audiobook. Share this powerful insight with someone who is currently trapped in a cycle of renting their entire life away, or leave a thought below describing the exact geographic market where you intend to anchor your first tangible asset. When you combine the natural appreciation of physical property with the strategic use of fixed-rate long-term debt, the wealth-building effect becomes truly extraordinary. If you secure a property using a 30-year fixed mortgage, the monthly payment you owe to the bank remains completely locked in stone, entirely immune to the changing tides of the economy. Yet, as the years march forward, the rental income generated by the asset climbs higher and the nominal value of the property expands. The spread between your fixed operational costs and your rising gross revenues widens into a massive river of cash flow, allowing you to pay down a frozen liability using future currency units that are worth a mere fraction of what they were when you first signed the contract. When you step back to look at this dynamic, you realize that structured debt is not a prison sentence, but a bridge that allows you to cross over from the vulnerable side of the economy to the invincible side. The lender thinks they are securing a stable return on their capital, but in reality, they are holding a contract that is slowly bleeding out its real value while you hold the physical structural asset that expands with the natural rhythm of human productivity. This asymmetry is the true engine of modern wealth acceleration, a profound secret that is hidden in plain sight, waiting for those with the courage to look past the conventional warnings of the uninitiated. To truly understand the power of this positioning, you must look at how this mechanism alters the path of a long-term builder. When an average person receives an increase in their income or a sudden windfall, their immediate psychological reaction is to upgrade their immediate lifestyle, purchasing depreciating consumer items that require ongoing cash flow to maintain. They create a prison of higher expenses that forces them to run even faster on the professional treadmill. But the strategic mind views every new stream of income as fresh ammunition to be deployed into the acquisition of more permanent infrastructure. They know that true status is not defined by what you display to the world, but by the quiet confidence of knowing your foundation expands independently of your daily labor. This philosophy demands that you completely redefine your personal metrics of success. The traditional system wants you to measure your progress by the balance in your checking account, because that balance represents capital that the banking institution can utilize for its own expansion. But your true financial baseline should be measured exclusively by the volume of productive, real-world assets you control. Every square foot of real estate, every share of a world-class enterprise, and every piece of proprietary intellectual property you secure is a permanent flag planted in the territory of independence, ensuring that no matter how chaotic the macroeconomic landscape becomes, your family's standard of living remains entirely secure. Consider taking a moment to sit quietly with this profound structural truth, allowing your mind to release the old habits of thinking that have kept so many individuals running in place for generations. If this clear, unvarnished look at the architecture of true wealth is giving you the focus you need to restructure your future, take a brief moment to connect with this movement. Subscribe to this audiobook collection. Share this strategic chapter with a hard-working individual who is currently losing their savings to inflation, Or leave a thought below about how you plan to shift your metrics from liquid currency to absolute asset control. As this wealth infrastructure matures, you discover that the ultimate return on your investments is not measured in luxury or excess, but in the absolute ownership of your time. When your assets generate enough baseline cash flow to sustain your lifestyle, you are no longer forced to trade your creative energy for someone else's agenda. You gain the freedom to choose your projects, to invest in your deepest relationships, and to build legacies that extend far past your own lifetime. You have taken the very inflation that was designed to rob you of your future, and you have turned it into the ultimate weapon to secure your permanent freedom. The shift toward controlling tangible infrastructure changes the way you view the entire global landscape. When you look at the city skyline or the commercial hubs driving commerce, you no longer see cold towers of glass and steel. You see high-utility, inflation-resistant engines that naturally absorb the expanding monetary base. This structural clarity provides an immense psychological edge over the general public, who remain caught in the panic of rising daily expenses. While the crowd complains about the changing costs of basic goods, the strategic allocator quietly positions their capital behind the very gates where those funds must ultimately be collected. To fully exploit this structural advantage, you must understand the deep mechanism of supply constraints. In a pure digital or fiat system, creation is effortless, requiring nothing more than a political decision or an algorithmic prompt. But in the physical world, creating new prime assets requires time, regulatory navigation, physical raw materials, and intense human labor. Because the supply of highly desirable land and top-tier commercial space is strictly limited by geography and physics, any increase in the total volume of money circulating through society creates an intense competition for those finite locations. The price of the asset climbs not because its intrinsic utility has changed, but because the value of the paper currency used to measure it is rapidly evaporating. This dynamic creates a profound wealth transfer that operates entirely in the dark. As the value of prime physical infrastructure climbs, the owners of these assets gain access to vast amounts of new borrowing capacity, using their expanding equity as pristine collateral to secure even more low-interest capital. They use this freshly acquired capital to buy out smaller competitors, upgrade their existing systems, or diversify into emerging industries, effectively compounding their reach across the economy. Meanwhile, the individual who relies solely on saving cash sees their relative purchasing power contract, finding themselves increasingly priced out of the very economy they help sustain through their daily work. Take a brief moment to pause and reflect on this structural reality, allowing yourself to fully grasp the invisible machinery that shapes modern society. If this deep breakdown is helping you unmask the true rules of wealth generation and providing the clarity you need to realign your financial path, take a moment to anchor yourself within this community. Subscribe to this audiobook. Share this insight with a driven individual who is tired of playing a losing financial game. Or leave a thought below regarding how you intend to transition your personal balance sheet from liquid vulnerability to absolute tangible control. Once you transition your mind from a preservation mindset to a strategic allocation strategy, every major economic shift becomes an opportunity rather than a crisis. You stop looking for short-term speculative wins and begin focusing on the steady, methodical accumulation of high-utility infrastructure. You realize that the greatest threat to your future is not market volatility or shifting consumer trends, but the slow, silent erosion of inactive capital. By choosing to plant your wealth in assets that naturally expand along with the global monetary base, you build a fortress that remains entirely unshakable, ensuring your prosperity for decades to come. The strategic accumulation of infrastructure leads directly to the core realization that true economic mastery is an intellectual and psychological game rather than a physical one. When you observe the vast majority of society, you see individuals trapped in a state of perpetual reaction, moving their money based on the changing panic of the day. They treat the financial markets like a casino, constantly looking for a hidden loophole or a rapid shortcut that will save them from the reality of inflation. But the true builders of long-term freedom understand that lasting success requires an absolute commitment to structural patience. They do not look for ways to beat the system in a single month. They design systems that naturally compound over multiple decades. This patience is rooted in an understanding of the relationship between time and value. In an era dominated by hyperspeed digital communication and instant gratification, the ability to delay gratification has become the ultimate competitive advantage. When you allocate capital into high-quality productive assets, you are making a conscious decision to value your future self over your present desires. You are choosing the quiet satisfaction of growing equity over the temporary thrill of consumer display. This psychological resilience forms the invisible barrier that separates the top layer of wealth creators from the rest of the world, providing a peaceful stability that no market downturn can disrupt. As your asset base expands, your focus naturally transitions from pure defensive preservation to aggressive, long-term legacy building. You stop thinking in terms of monthly budgets and begin thinking in terms of generational impact. You realize that the structures, businesses, and real estate you are securing today will outlast your own physical presence, providing a continuous, inflation-resistant shield for the people and causes you care about most. You are no longer just surviving a changing monetary system. You are actively rewriting the financial trajectory of your lineage, transforming the very erosion of currency into the foundation of your family's permanent sovereignty. If this deep generational perspective is resonating with the vision you hold for your own life, take a quick moment to anchor this energy. Subscribe to this comprehensive audiobook collection. Share this visionary chapter with someone who needs to break out of short-term thinking, or drop a comment below sharing your ultimate vision for the legacy you are building. The transition to legacy building requires a complete mastery over your internal emotional state. The financial system is filled with intentional distractions, designed to trigger fear, greed, and impulsive decision-making among the masses. Every media headline and temporary market crash is a test of your strategic discipline. By training yourself to look past the immediate noise and focus entirely on the foundational utility of the assets you control, you insulate your wealth from emotional contagion. You remain perfectly calm while the crowd panics, recognizing that the long-term trajectory of productive assets always aligns with the absolute growth of the global economic engine. The integration of psychological calm and generational patience prepares you for the ultimate phase of your personal growth strategy, building a culture of internal accountability. When an individual lacks a clear long-term plan, Their personal finances are almost always governed by immediate peer pressure and social comparison. They look at what others are displaying in the visible world and feel an artificial urge to match that velocity, even if it means sacrificing their underlying security to do so. A master allocator operates with a completely detached, sovereign mindset, recognizing that the only scoreboard that truly matters is the private ledger of their own productive assets. This complete independence from external validation allows you to make moves that appear completely counterintuitive to the casual observer. While the crowd is buying consumer goods at the peak of a retail cycle, you are quietly accumulating assets when they are undervalued and overlooked by the masses. You understand that the true value of an asset is not determined by its current popularity or its mention in public forums, but by its core utility and its capacity to produce a consistent cash flow. By staying grounded in this foundational reality, you protect your capital from the massive waves of over-speculation that regularly sweep through the modern financial landscape, destroying the undisciplined player. As your framework matures, you begin to see that the most impactful investment you can ever make is the continuous refinement of your personal judgment. The world is changing at an accelerating pace, and the strategies that worked perfectly in the previous decades may require strategic calibration to remain effective in the future. By maintaining an open, fluid mind that is dedicated to constant self-education, you ensure that you are always capable of identifying new areas of scarcity and utility before they become mainstream. Your mind becomes a flexible instrument of navigation, completely capable of steering through any macroeconomic storm with absolute precision. If this deep commitment to lifelong education and strategic sovereignty is matching the exact standards you hold for your own future, take a brief moment to anchor this state of mind. Subscribe to this audiobook series. Pass this profound message along to a hardworking creator who is ready to escape the rat race. Or drop a comment below sharing the high-value discipline you are focusing on expanding over the coming months. Ultimately, achieving permanent resilience against the slow erosion of currency is a journey that reshapes your entire character. It forces you to shed the passive habits of the consumer and step fully into the demanding, deeply rewarding role of an active builder. It requires you to look past the superficial trends of the modern economy and anchor your life firmly inside the bedrock of real-world value, scarcity, and productivity. The global monetary baseline will continue its inevitable expansion, but by standing firmly upon a foundation of high-leverage skills and tangible infrastructure, you ensure that your future remains completely unshakable and defined by total freedom. The architecture of an independent life rests entirely on your capacity to transform personal knowledge into economic value. While tangible structures and global equities serve as magnificent storage containers for wealth, your mind remains the primary engine that generates the initial surplus. The world undergoes rapid, unpredictable technological shifts, and entire industry can disappear over a brief horizon. Yet a human being who possesses specialized, high-leverage capabilities will always command premium compensation. You must stop viewing your career as a static ladder to climb and begin viewing it as a dynamic portfolio of skills that you continuously optimize to solve the most complex problems of the marketplace. To maximize the value of this internal asset, you must learn to distinguish between low-leverage activities that can be easily automated or outsourced, and high-leverage capabilities that require deep human judgment, creativity, and strategic vision. If your daily labor consists entirely of executing repetitive algorithmic tasks, you are highly vulnerable to institutional shifts and technological replacement. But when you master the art of strategic negotiation, high-level engineering, systemic design, or persuasive communication, you elevate your value to an uncopyable status. You become an indispensable resource, allowing you to naturally scale your fee structures upward as the baseline cost of the surrounding economy climbs. This persistent growth of your internal capacity requires an absolute willingness to embrace discomfort and step out of familiar routines. Most people stop actively learning the exact moment they exit the formal educational system, allowing their cognitive muscles to slowly atrophy in the comfort of a steady routine. They master one specific operational system and cling to it for decades, blind to the reality that the world is moving past them. A true builder treats their personal education as an ongoing lifetime obligation, dedicating structured time every single week to acquiring new frameworks, studying market dynamics, and mastering the tools that will define the coming era. Take a profound moment to pause and examine the current trajectory of your personal growth, asking yourself whether your current skill set is expanding fast enough to outpace the shifting economic base. If this uncompromising focus on personal mastery and continuous self-education is providing the exact blueprint you need to take absolute control of your career, take a quick moment to anchor this alignment. Subscribe to this audiobook, share this powerful message with a driven professional who is currently feeling stuck in their role, or leave a thought below identifying the exact high-value capability you are committed to dominating next. When your specialized capabilities produce a massive, consistent cash surplus, you gain the financial power to buy your way out of the time-for-money trap entirely. You no longer deploy your income to purchase temporary status symbols or fleeting luxuries designed to impress the crowd. You channel every available dollar into the acquisition of core infrastructure that yields passive cash flow. Your skills fund your investments, and your investments eventually fund your complete life, creating an ironclad barrier of protection that completely insulates your standard of living from the chaotic decisions of central authorities. The ultimate mastery over your internal earning potential sets the stage for a sophisticated understanding of market cycles and human behavior. When the general public encounters an economic downturn or a sudden surge in consumer pricing, their immediate evolutionary instinct is driven by blind panic. They begin dumping long-term assets at the absolute bottom of a cycle, desperate to salvage whatever liquid paper currency they can hold in their hands. A master scriptwriter of wealth recognizes that these moments of extreme market dislocation are the precise periods when the greatest fortunes in human history are systematically assembled. The crowd operates on pure emotion, but the strategic allocator operates on pure mathematical calculation. To take full advantage of these inevitable market cycles, you must develop an unshakable emotional detachment from the daily financial headlines. The media ecosystem thrives entirely on creating constant state of emergency because fear is the ultimate mechanism for capturing human attention. If you allow your investment decisions to be dictated by the shifting tone of news anchors or the volatile commentary of online forums, you are guaranteed to destroy your own progress. You must learn to view a sharp decline in asset prices not as a personal crisis, but as a massive liquidation sale where world-class infrastructure, premium equities, and valuable land are suddenly discounted by the marketplace. This brings us to the profound concept of structural asymmetric positioning, where you deliberately structure your life to capitalize on the mistakes of the undisciplined crowd. When the economy is flush with printed currency and everyone is celebrating an artificial boom, you remain deeply disciplined, accumulating cash reserves and maintaining a lean, high-utility operational structure. Then, when the inevitable contraction arrives and the overextended participants are forced to sell off their prime holdings to cover their liabilities, you step into the arena with absolute precision. You are using the very instability of the system to transfer high-quality infrastructure into your own permanent control. If this highly calculated strategic approach to economic volatility is aligning with the ambitious goals you have set for your future, take a quiet moment to anchor this transformation. Subscribe to this audiobook. Share this powerful lesson with a driven individual who is ready to stop reacting to the world, or leave a brief comment below, sharing how you plan to maintain your emotional discipline during the next major market correction. As you execute this blueprint month after month, the visible progress of your portfolio becomes a testament to the power of structured patience. You watch as the assets you accumulated during periods of widespread panic slowly recover, stabilize, and then violently compound upward when the central authorities inevitably restart the currency printing press to rescue the system. You have successfully positioned your wealth inside an unbreakable loop, where both the expansion and the contraction of the monetary base work together to multiply your net worth, ensuring that your long-term independence remains completely untouchable. The cultivation of mathematical calculation over emotional reaction prepares you for the deep realization that inflation is not an arbitrary natural disaster, but a predictable consequence of modern state policy. When you look back through the annals of history, you find that almost every major civilization eventually succumbed to the temptation of debasing its currency to fund its immediate expenditures. In ancient times, emperors quietly shaved the edges off silver coins or mixed precious metals with cheaper copper, hoping the populace would not notice the dilution. In the modern era, physical clipping has been replaced by sophisticated digital ledger adjustments, but the underlying psychological motivation remains identical. It is far easier for a system to print new currency units than it is to enforce fiscal discipline or raise direct taxes. Understanding this historical inevitability changes the way you view the entire global hierarchy. You stop expecting institutional systems to suddenly shift their behavior or act in your personal interest. The primary duty of a central monetary authority is to maintain the liquidity and stability of the systemic engine as a whole, even if that preservation requires sacrificing the individual saver along the way. When you accept this reality without bitterness, you gain a massive competitive advantage. You stop complaining about policy decisions and begin positioning your capital so that every choice made by the central authority naturally accelerates the valuation of your personal holdings. This perspective shift demands a complete restructuring of how you assess risk. The average individual believes that keeping their capital tucked inside a traditional federally insured bank account is the safest possible choice. They see the guarantee on the door and feel an artificial sense of absolute security. But they fail to recognize that while their nominal balance is fully protected, the actual purchasing power of that balance is exposed to a guaranteed slow-motion destruction. The real risk is not market fluctuation or asset price volatility. The real risk is the absolute certainty of holding a melting asset in a warming world. True safety is found exclusively in ownership, control, and the possession of utility that the world cannot function without. If this deep, analytical look into the historical reality of money is giving you the strategic foresight to rewire your asset protection, take a very brief moment to ground this progress. Subscribe to this audiobook. Share this powerful historical lesson with a hard-working provider who is tired of losing ground, or leave a brief message below detailing how you plan to transition from a passive saver into a sovereign owner. Once you firmly anchor your wealth in finite realities, whether that means exceptional businesses, productive agricultural land, or scarce digital protocols, you become completely immune to the structural choices of political systems. If the governing bodies choose to flood the economy with trillions of new currency units to navigate the next structural crisis, you do not panic. You simply watch as the nominal price of your properties, shares, and resources adjusts upward to reflect the new volume of money in circulation. You have effectively removed your future from the casino of monetary policy, ensuring that your prosperity is driven entirely by the real, productive output of human civilization. This systemic inevitability brings us directly to the concept of psychological sovereignty in an age of hyperinformation. When you realize that the global currency system is structurally bound to lose its value, you also notice that the information ecosystem surrounding it is designed to keep you in a state of perpetual reactivity. The average person consumes breaking news, short-form analysis, and sensationalized forecasts, hoping that a sudden piece of data will tell them exactly what to do next. But this constant intake of noise only breeds an internal paralysis, making it impossible to hold the steady, unshakable positions required to outrun the silent erosion of your wealth. To achieve a true state of financial independence, you must learn to practice an aggressive form of cognitive filtering. You do not need to know every minor fluctuation of the daily markets, nor do you need to follow every prediction made by television analysts. What you need is an absolute, uncompromising focus on the core foundational realities that govern human survival and economic utility. When you anchor your mind only in what is fundamentally true, that human beings will always require physical shelter, that world-class businesses will always produce essential solutions, and that scarcity will always command a premium, you insulate your strategy from the emotional contagion of the crowd. This internal stillness allows you to view the passage of time not as an enemy that threatens your security, but as the ultimate ally that compounds your efforts. While the unprepared individual looks at the coming decade with a deep sense of underlying anxiety, wondering how high prices will climb, the strategic owner looks forward with a quiet, calculated expectation. They know that every month they spend accumulating productive equity, every year their properties generate consistent cash flow, and every hour they dedicate to scaling their specialized capabilities is adding another layer of stone to their personal fortress. If this deep structural focus on cognitive filtering and long-term stillness is reshaping the way you plan your future, take a quick moment to lock in this commitment. Subscribe to this audiobook. Share this powerful mental framework with a hard-working individual who is currently overwhelmed by the economic noise, or drop a comment below sharing the specific practice you use to maintain absolute focus in a distracted world. As this internal clarity solidifies, your entire approach to life becomes deeply intentional. You stop drifting through the cycles of consumption and reaction, and you begin moving through the world with the measured precision of an architect. You recognize that the chaos of the macroeconomic landscape is simply the backdrop against which your personal independence is forged. By refusing to let the system dictate your emotional state, and by consistently converting your liquid paper into permanent high-utility assets, you ensure that the shifting tides of the world serve exclusively to elevate your path. This profound level of internal focus inevitably changes how you interact with the concept of risk itself. In the conventional world, risk is framed as something to be completely avoided, a dangerous precipice that must be circumvented by choosing the most predictable, standardized paths available. But when you look closely at the mechanics of a currency that expands by design, you realize that the most passive standard path is actually the one carrying the ultimate structural hazard. By seeking a life entirely free of immediate volatility, the average person inadvertently guarantees the slow, certain erosion of their entire lifetime of work. True risk management is not about fleeing from uncertainty, but about deliberately choosing which risks are worth taking to secure a permanent foundation. When you step into this mindset, you begin to welcome a certain degree of structural friction as the natural price of admission for long-term independence. You understand that acquiring a business, managing a piece of real estate, or mastering a highly complex premium capability will always bring moments of intense challenge and unexpected obstacles. But instead of viewing these setbacks as a signal to retreat to the illusion of safety, you view them as the necessary labor required to construct an unshakable fortress. The discomfort you experience in the short term is the precise mechanism that hardens your strategic judgment, preparing you to handle much larger allocations of capital as the broader economy continues to grow. This willingness to navigate friction allows you to build a standard of living that is completely decoupled from the general sentiment of the public. While the masses are caught in a constant cycle of temporary optimism and deep economic despair, your life remains anchored by a steady, predictable execution of your personal blueprint. You become highly disciplined with your excess capital, refusing to let temporary windfalls alter your long-term focus. And you remain perfectly calm when the surrounding markets face temporary corrections. You are operating on a multi-decade timeline, recognizing that the temporary noise of any single year is completely irrelevant to the compounding trajectory of high-utility, finite assets. Consider taking a quiet, meditative moment to evaluate your own relationship with risk and discomfort, acknowledging the profound freedom that comes from choosing strategic growth over passive decay. If this uncompromising look at the true definition of security is providing the framework you need to step fully into your power, take a quick moment to ground this realization within this space. Subscribe to this audiobook collection. Pass this transformative perspective along to a driven creator who is ready to upgrade their life, or leave a thought below about how you plan to redefine risk in your personal strategy this year. As your personal fortress takes shape, you discover that the ultimate value of your efforts is the absolute clarity it brings to your daily life. You no longer wander through the world wondering if you will be able to sustain your family's future or keep pace with the rising costs of survival. You know exactly where your wealth is planted, you understand the precise mechanisms that cause it to expand, and you recognize that every macroeconomic shift is simply another current pushing your vessel forward. You have transformed the very inflation that robs the passive observer into the definitive catalyst for your permanent, sovereign freedom. The deliberate choice to welcome strategic friction marks the exact turning point where you step out of the crowd and enter the ranks of the truly elite. Most people spend their entire lives looking for the path of least resistance, avoiding any decision that requires deep thought, patience, or temporary sacrifice. They buy consumer items on credit because it provides instant gratification, and they leave their savings in depreciating cash accounts because it feels comfortable in the moment. But the master allocator understands that true comfort is an illusion designed to keep the masses dependent on the system. By actively choosing to navigate the complexities of asset ownership, you build an internal muscle that makes you completely adaptable to whatever the macroeconomic landscape demands. This internal adaptability is the foundational element required to master the subtle art of capital allocation across diverse international horizons. In an interconnected global economy, limiting your perspective to a single country or a single currency is an unnecessary vulnerability. When a specific nation experiences rapid monetary debasement or political instability, its local asset values may face immense artificial suppression. A sophisticated builder trains their eyes to look past their immediate borders, seeking out high-utility real estate, dominant multinational corporations, and structurally sound systems in jurisdictions that respect private property and reward capital efficiency. You are no longer a hostage to the fiscal policy of one government. You become a global citizen whose wealth is distributed strategically across the safest environments on Earth. This advanced layer of diversification demands that you completely cast aside the concept of geographic loyalty when it comes to the preservation of your life force. The system wants you to believe that investing exclusively in your local market is a civic duty, but the system will not rescue you when the purchasing power of your local currency collapses. Your primary responsibility is the absolute protection and expansion of the resources you have earned through your hard labor. By positioning a portion of your wealth in foreign equities, cross-border real estate, or decentralized digital infrastructure, you ensure that even a catastrophic collapse of your local economy will leave your global net worth completely intact and ready to capitalize on new opportunities. Take a moment to lean back and allow this expansive international perspective to completely reshape your vision of what is possible. If this global blueprint for absolute protection is providing the visionary clarity you need to secure your family's future, take a quick moment to anchor this alignment. Subscribe to this audiobook series. Share this profound international chapter with a driven entrepreneur who is ready to scale their thinking, or leave a brief message below identifying the specific global asset class you are committed to exploring next. As your international wealth architecture comes into focus, the daily fluctuations of any single market or political regime lose all power over your peace of mind. You look at the global map not through the eyes of a passive traveler, but through the lens of a sovereign strategist who understands exactly where value is treated with the highest respect. You watch as your resources compound across multiple time zones, currencies, and industries, creating an intricate web of security that no single central bank can ever unravel. You have successfully elevated your strategy to the absolute highest tier, turning the systemic chaos of the modern era into the ultimate engine for your permanent, borderless freedom. This advanced international perspective naturally demands a profound reassessment of how a sovereign strategist handles the flow of day-to-day liquidity. While distributing your core holdings across the safest jurisdictions on Earth provides absolute structural defense, you must still interact with the immediate operational environment to fund your daily life, fuel your businesses, and execute new acquisitions. The individual who lacks a systemic plan keeps all their working capital in a single local checking account, completely exposed to the sudden decisions of their domestic banking system. But a master allocator treats their liquid treasury with the exact same architectural precision they apply to their multi-million-dollar asset portfolios. To achieve this absolute operational resilience, you must learn to master the concept of multi-currency treasury management. Instead of allowing your cash reserves to sit entirely in one form of paper money, you distribute your immediate liquidity across a basket of the world's most stable, liquid, and fundamentally backed currencies. When one region faces intense political pressure or economic instability, causing its currency to lose ground on the global stage, your holdings in other stable jurisdictions naturally balance the equation. You are effectively creating a private macroeconomic buffer, ensuring that your immediate purchasing power remains perfectly level, no matter how violently the domestic currency fluctuates. This approach requires you to completely detach yourself from the traditional banking structures that keep the average citizen tied to a single geographic point. In the modern era, digital financial infrastructure allows you to establish international treasury accounts, hold diverse currency reserves, and move capital across borders with absolute speed and compliance. You treat these liquid reserves not as a vehicle for long-term wealth accumulation, since all paper currency ultimately devalues over a long enough horizon, but as an agile tactical reserve. It is the fuel that allows your machine to run smoothly, ready to be deployed the exact moment a prime asset in any corner of the world becomes deeply discounted. Consider taking a quiet, calculated moment to examine the architecture of your immediate cash reserves, recognizing the massive vulnerability of leaving all your operational fuel exposed to a single systemic failure. If this blueprint for borderless treasury management is expanding your financial horizon and giving you the structural tools to claim absolute sovereignty, take a moment to anchor this transformation. Subscribe to this audiobook collection. Pass this advanced lesson along to a forward-thinking business owner who needs to upgrade their operations, or drop a comment below detailing how you plan to diversify your operational cash this year. Once you secure your immediate liquidity within a multi-currency global framework, you unlock an extraordinary level of personal confidence. You no longer watch the daily headlines with a sense of underlying panic about bank stability, regional inflation, or sudden policy shifts. You know that your operational reserves are distributed safely across the most stable financial corridors on Earth, perfectly aligned with the global network of businesses and real estate you control. You have successfully eliminated the final structural vulnerability from your financial plan, transforming your entire personal economy into an unshakable, self-sustaining empire built for permanent freedom. This seamless management of your liquid treasury completes the operational framework of your financial empire, allowing you to turn your attention toward the final and most critical pillar of long-term wealth, the structural dynamics of asset accumulation within local markets. While a borderless strategy provides an unmatched layer of defense against global shocks, the physical reality of daily life still unfolds within immediate communities. The individuals who build the most enduring legacies understand that true financial independence is not achieved by completely abandoning their local ecosystem, but by mastering the specific legal, tax, and property structures that govern the land beneath their feet. To dominate this local landscape, a strategic allocator must learn to view their immediate community not merely as a place of residence, but as a complex network of zoning laws, tax incentives, and private investment opportunities. Governing bodies frequently design specialized tax codes to incentivize private individuals to solve critical societal problems, such as developing affordable housing, investing in domestic manufacturing, or pioneering clean energy infrastructure. By intentionally aligning your local capital deployment with these institutional incentives, you can legally shield a massive percentage of your earnings from income taxation. You are no longer fighting the local system. You are using its own rule book to accelerate the growth of your physical holdings. This sophisticated approach requires an absolute commitment to building deep, high-value relationships with the leading professionals in your local market. You cannot master the intricacies of property law, corporate structuring, and tax optimization entirely on your own while simultaneously scaling your global enterprises. A true builder actively curates an elite council of specialized accountants, real estate brokers, and corporate attorneys who possess decades of localized expertise. By empowering these specialists to optimize your domestic operations, you ensure that every contract signed, every property acquired, and every corporate entity established is perfectly engineered for maximum protection and efficiency. Take a profound moment to pause and reflect on the structure of your immediate legal and financial foundation, recognizing the immense power that comes from mastering the rules of your own territory. If this localized blueprint for absolute structural efficiency is giving you the strategic clarity you need to solidify your legacy, take a brief moment to ground this momentum. Subscribe to this audiobook series. Share this vital operational chapter with a determined local business owner who is ready to optimize their structure, or leave a message below sharing the specific domestic asset class you are prioritizing this quarter. Once you synchronize your global multi-currency treasury with a perfectly optimized local asset architecture, your financial sovereignty becomes entirely complete. You stand firmly upon a foundation that is mathematically engineered to thrive in any economic environment, capturing the upside of global currency expansion while remaining deeply insulated from domestic volatility. The broader macroeconomic tides will continue their unpredictable movements, and the unbacked paper currencies of the world will proceed along their path of steady devaluation. But your personal empire remains completely unbreakable, permanently anchored in the timeless realities of utility, scarcity, and absolute ownership. The optimization of your local asset architecture completes the structural cycle, yet it opens up a massive, profound dimension of financial sovereignty that most builders completely overlook: the absolute necessity of institutional independence. When an individual expands their local and global holdings, their wealth is still ultimately tied to the rails of the legacy banking framework. They rely on traditional corporate entities, standard clearinghouses, and conventional legal titles that exist entirely at the pleasure of the governing authorities. A master strategist recognizes that true long-term security requires you to steadily transition your wealth away from these centralized choke points and into private, self-sovereign holding structures that no single entity can easily freeze, access, or manipulate. To construct this final bulletproof layer of your empire, you must learn to master the art of private equity, asset protection trusts, and decentralized digital custody. Instead of holding your most valuable assets directly in your personal name or within basic local corporations, which can be easily targetable during legal disputes or systemic banking crises, you transfer ownership into specialized multi-tiered trust structures located in highly protective legal jurisdictions. These structures legally separate the technical ownership of the wealth from your personal control, ensuring that your assets remain completely insulated from external liabilities, while continuously distributing the underlying cash flows to fund your borderless lifestyle. This advanced operational shift requires you to adopt the mindset of a silent sovereign governor, completely detached from the superficial mechanics of public ownership. The system wants you to hold every title proudly in your own name because visibility makes you completely vulnerable to institutional leverage. But the highest tier of wealth builders operate entirely in the shadows, controlling everything while technically owning nothing on the public record. They hold their assets through interconnected networks of private holding companies and confidential trusts, ensuring that their financial footprint remains completely invisible to the outside world, while their real-world purchasing power compounds aggressively month after month. Take a profound, quiet moment to step back and evaluate the absolute privacy of your current wealth foundation, recognizing the immense security that comes from removing your name from the public scoreboard. If this advanced blueprint for absolute privacy and institutional independence is providing the exact clarity you need to finalize your generational legacy, take a brief moment to solidify your placement here. Subscribe to this audiobook collection. Share this masterclass with an ambitious builder who is ready to step out of the light. Or leave a thought below sharing the specific privacy mechanism you plan to implement next. Once you completely isolate your global wealth architecture behind private sovereign holding structures, you attain a level of freedom that very few human beings will ever comprehend. You no longer walk through life carrying the underlying stress of legal vulnerability, bank defaults, or sudden institutional overreach. You look at the changing economic landscape with absolute calm, knowing that your real-world assets are perfectly secured, completely invisible, and continuously scaling alongside the natural expansion of the global engine. You have successfully weaponized the very mechanisms of the modern financial system to build a private empire that is entirely unshakable, permanently free, and completely your own. This transition into institutional independence and absolute privacy signals the final evolution of your financial journey. The shift from an active builder to a systemic architect. When you first began, your primary focus was simply surviving the hidden tax of inflation by acquiring tangible assets. But as your private empire scales, you realize that the ultimate asset you are managing is no longer just money, real estate, or corporate shares. It is the very structure of your family's future across generations. You are building a private institutional framework that operates with the permanence, discipline, and resilience of a sovereign state. To sustain this level of sovereignty past your own lifetime, you must master the mechanics of generational governance. Most wealth is entirely destroyed within 3 generations because the initial builder focuses heavily on accumulating capital, but completely fails to pass down the specialized psychological discipline and strategic education required to manage it. To prevent this systemic decay, you must treat your family structure like a private board of directors. You establish formal family constitutions, integrate your heirs early into the operational discussions of your private trusts, and condition their access to capital on their mastery of high-leverage skills and wealth preservation principles. This advanced phase of architecture demands that you view your wealth not as a personal pool of liquidity to be consumed, but as a perpetual endowment designed to fund excellence, enterprise, and protection forever. You establish clear structural rules for how the cash flows from your global assets are to be reinvested, ensuring that the core capital remains completely untouched, while the surplus is continuously deployed into new frontiers of scarcity and innovation. You are effectively creating an unstoppable, compounding momentum that carries your lineage forward through whatever economic, political, or technological shifts the next century brings. Take a profound, deliberate moment to sit with the sheer scale of the vision you are constructing, allowing yourself to fully transition from short-term survival to infinite horizon planning. If this ultimate blueprint for generational governance and systemic sovereignty is providing the definitive clarity you need to cement your place in history, take a final moment to anchor your commitment to this path. Subscribe to this audiobook masterpiece. Pass this ultimate chapter along to a visionary leader who is ready to build a true legacy, or leave a definitive comment below sharing the foundational rule you intend to establish for your family's perpetual endowment. Ultimately, outrunning the systemic erosion of currency is merely the baseline entry fee to a much larger game. The global monetary system will continue its predictable downward trajectory, and the unbacked paper currencies of the world will eventually dissolve into historical irrelevance. But by transforming your life force into specialized capabilities, aggressively converting your surplus into high-utility global infrastructure, and shielding that infrastructure within private sovereign structures, you achieve the ultimate realization of human effort. You have built a fortress that cannot be broken, a legacy that cannot be eroded, and a state of permanent absolute freedom that belongs entirely to you and your lineage for generations to come. With the architecture of your generational endowment firmly established, you have achieved what few ever manage. You have decoupled your family's survival from the whims of the state and the decay of its currency. Yet, as a systemic architect, you must now look at the final frontier of absolute sovereignty. True permanence requires you to understand how wealth interacts with the macro-technological shifts of human civilization. Wealth does not exist in a vacuum. It flows toward the systems that offer the highest combination of efficiency, security, and utility at any given point in history. Throughout human history, dominant asset classes have shifted alongside technology. When the world was agricultural, wealth was measured purely in acres of fertile soil. During the Industrial Revolution, it shifted to factories, energy resources, and mechanical infrastructure. In the digital age, the ultimate frontier of scarcity and utility is shifting once again. This time toward decentralized computation, cryptographic networks, and proprietary artificial intelligence architectures. To ensure your fortress remains unbreakable over the next century, a portion of your generational surplus must be positioned at the absolute vanguard of these technological realities. This means your private holding structures must actively accumulate the digital real estate of the modern world. Just as physical land appreciates because it is finite and essential, elite digital protocols and proprietary data sets derive value from their absolute utility and mathematical scarcity. When you own the underlying networks that facilitate global trade, or the compute infrastructure required to power the global intelligence grid, you are occupying the ultimate toll booths of the future economy. The currency units used to pay those tolls will inevitably change, but the requirement to pay the toll remains absolute. This realization strips away the final layer of financial illusion. You no longer see a divide between the traditional economy and the technological economy. There is only one economy, a continuous struggle between systemic erosion and productive capability. By ensuring that your family endowment holds a balanced, hyper-resilient portfolio spanning physical land, essential corporate equities, multi-currency global treasuries, and bleeding-edge digital infrastructure, you create a closed-loop system that feeds on volatility and grows stronger with every crisis. Take a final, profound moment to absorb the entirety of this strategic blueprint. You have transitioned from a linear laborer to a compounding asset owner, an international strategist, a private sovereign governor, and finally, a visionary architect of time. The path is demanding, and the discipline required is absolute, but the reward is nothing less than the total ownership of your destiny. Note, since this concludes the comprehensive masterclass blueprint on structural financial independence, how would you like to pivot our focus next? We can dive deep into the specific mechanics of setting up borderless holding structures or analyze the current macroeconomic indicators shaping the asset landscape today. To fully integrate these bleeding-edge digital assets into a generational architecture, the systemic architect must look past the consumer-facing speculation of the markets and focus entirely on infrastructure layer ownership. Just as the railroad tycoons of the 19th century built wealth not by running individual trains but by owning the physical tracks everyone else had to use, modern sovereignty is secured by owning the foundational protocols of the digital economy. The modern toll booth strategy. When you anchor capital into the infrastructure layer, you are investing in three core pillars of digital scarcity. 1. Decentralized compute power, dollar compute dollar, the processing infrastructure required to run global artificial intelligence networks and secure cryptographic ledgers. 2. Proprietary data monopolies, finite, high-utility datasets that cannot be replicated and are required to train advanced predictive models. 3. Layer 1 network protocols, the foundational software layers that process global transactions. By positioning your private trust structures as an operator or owner of these infrastructure layers, you ensure that your wealth is directly tied to global transaction volume. If the underlying currency of a nation inflates by 20%, the nominal cost of accessing these computing networks automatically scales upward to match the macro reality. You are no longer speculating on the price of an asset. You are collecting a systemic royalty on human advancement. The sovereign velocity loop. With this final layer integrated, your financial ecosystem achieves total closed-loop velocity. The surplus generated by your high-leverage personal skills flows directly into tangible real estate and global corporate equities. These physical assets generate steady, tax-sheltered cash flow. That cash flow is then split. One portion funds your immediate multi-currency treasury, while the other aggressively secures finite digital protocols. This structural loop creates a self-reinforcing flywheel. The physical assets provide the unshakable defense and baseline stability, while the digital infrastructure provides asymmetric upside and protection against technological displacement. The economic storms of the future will come. Currencies will be rewritten. Banking systems will restructure, and central authorities will continue to manipulate paper mediums of exchange. But for the architect who controls the physical land, the global enterprise, the international treasury, and the digital protocol, every storm is simply a tailwind. You have achieved absolute alignment with reality. This brings our high-level philosophical framework to its absolute completion. To bridge the gap from theory to execution, where should we direct our tactical focus? We can map out the precise legal mechanics of asset protection trusts or break down the operational steps to establish a multi-currency corporate treasury. The final sovereign equation. Every piece of the blueprint, from the initial shift away from linear labor to the mastery of cross-border asset protection, converges into a single, definitive reality. The absolute separation of your life force from the systemic decay of unbacked paper currency. The true ending of this journey is not a destination or a specific dollar amount on a screen. It is the moment your private ecosystem achieves total escape velocity. When your portfolio of physical land, dominant global enterprises, and finite digital infrastructure generates a yield that completely outpaces both your lifestyle inflation and the expansion of the global monetary base, you enter a state of total structural autonomy. You are no longer a passive participant in an economic game designed to slowly strip away your purchasing power. You become the author of your own financial ecosystem, an unshakable fortress built to withstand the political, monetary, and technological shifts of the next century. The economic landscape will continue its predictable, cyclical disruptions. Central banks will print, currencies will fluctuate, and the masses will remain caught in the panic of the immediate headline. But you will look out at the horizon with absolute clarity and calm. Your assets are real, your privacy is secure, your treasury is global, and your legacy is permanent. You have successfully crossed the final chasm. You are no longer managed by the economy. You manage it. The game is over and your freedom is absolute. With the masterclass now fully concluded from philosophy to its final resolution, how would you like to proceed? We can transition into a tactical workshop to execute these concepts, or pivot to an entirely new strategic topic of your choice.